Hey everyone, welcome back to the channel. At the beginning of April, I dove into Reysaş Logistics 2023 results, sparking some lively discussions. Many of you requested a deeper look into the specific part of their operation, Reysaş GYO, their REIT division. So that's exactly what we are diving into today. Before we get started, a quick heads up. I own shares in both Reysaş stocks. But remember, everything discussed here is for educational and entertainment purposes only. It is not financial advice, so make sure to do your own research. Now, let's address the elephant in the room. Reysaş GYO stock has been on a remarkable journey, climbing from around 30 cents at the start of 2022 to $1.07 today, a more than threefold increase in just 2.5 years. Today, we are going to explore whether this growth has filled out its intrinsic value or if the stock still has room to run. As we unpack the numbers and trends, I will be using some visuals to help us along, so make sure to keep watching. And if you find this analysis helpful, please give me a thumbs up and consider subscribing for more in-depth discussions like this one. Now, Reysaş GYO operates as a REIT, which stands for Real Estate Investment Trust. Unlike the American REITs you may be familiar with, Reysaş GYO doesn't pay any dividends. Instead, they focus on reinvesting their earnings to fuel growth, without diluting your ownership. This is a crucial point, because while many American REITs offer hefty dividends, they often finance this by issuing new shares, which dilutes existing shareholders' stakes. I'm not saying the American model is inherently flawed. Dividend payments, coupled with share dilution, can work if the investments driven by this dilution results in higher growth. However, that is a significant if. On the other hand, Reysaş GYO, as I mentioned, avoids both these paths. They neither pay dividends nor dilute your shares. In the chart I will show you next, you will see their asset valuation in dollar terms skyrocket from a $177 million valuation at their IPO in 2010 to over $1 billion today, 13 years later. That is a compound annual growth rate of 14.4%, which is substantial, especially considering there has been no dilution of shareholder equity. Additionally, the business benefits from very stable and secular trends. For example, the surge in e-commerce has created a massive demand for warehouse space, a sector where Reysaş GYO specializes, renting out to giants like Amazon and Carrefour. Let's dive into these charts to better understand the scale of growth and what it means for investors like us. Reysaş GYO isn't just about real estate. They have also ventured significantly into the renewable energy sector. They are installing solar panels atop their warehouses and selling the generated electricity to their tenants. This not only reduces energy costs for their renters, but also opens up a lucrative revenue stream for Reysaş. I believe the returns from their solar investments are easily over 20%, supported by strong environmental and economic tailwinds. To illustrate the scale of this solar venture, consider this. The 50 megawatts of solar capacity Reysaş is working toward rate enough electricity to power nearly 6,200 American households annually. Now, shifting gears to the financials. This time, I have translated the balance sheet myself, rather than relying on automated tools like Google Translate to ensure accuracy in our discussion. As you can see, while there has been an uptick in the short-term debt, both long-term and total debt have decreased. This is a positive trend, indicating prudent financial management, and I believe this trend will continue, strengthening their financial position even further. Let's take a closer look at these numbers and what they mean for Reysaş's financial health. Now, let's dive into some of Reysaş GYO's key financial ratios. But let's skip the net profit margin for now, as it includes asset appreciation, which can skew the real picture. Instead, look at their EBITDA to net financial debt ratio, standing impressively at 8.29, indicating robust financial health. The EBITDA margin itself has surpassed 10% in 2023, and the operating profit margin, which I prefer as it excludes asset appreciation, has also increased to over 10%. Their leverage ratio is at a mere 0.11, which suggests a very low financial risk. Switching to the income statement, I disregard the net income figure for valuation purposes, because it includes the asset appreciation as I mentioned earlier. I believe operating income, which reached 1.7 billion liras this year, offers a clearer picture of their operational efficiency. Though I usually convert the profits using the exchange rates at the end of each period, this time I used the rates from the final day of the year for an added layer of conservatism. Despite Reysaş receiving monthly payments in varying exchange rates, and their international tenants, like Mercedes, pay in euros or dollars directly. Here is a visual showing their operating profit converted to $57 million. Remember, this is a non-GAAP measure that I personally use to gauge real operational success. The growth in dollar terms is notable too, with an increase of 78% last year and 90% this year. With a current market cap of $541 million, Reysaş GYO is trading at single-digit multiples, a rare find in high-quality businesses with durable moats and high growth, which is the core of my investment thesis. As we continue, keep in mind that these financial insights form the bedrock of why I see Reysaş as a compelling investment opportunity. If you found this analysis useful and want to dive deeper into Reysaş GYO, I have compiled a comprehensive 35-page deep dive on my Patreon. By subscribing to my Patreon, not only will you get access to this detailed report, but you will also unlock upcoming analysis like this month's feature on TAV airports. It is a fantastic way to support the channel and get more exclusive content. Before we close, Reysaş Logistics announced yesterday that they are going to split the stock 4-for-1, so the price will be divided by 4 and you will have 3 additional shares for each one you own. I will keep an eye on when that will happen, but I don't think it will take that long. And that's all for today. If you enjoyed the video, please hit that like button, drop a comment below, maybe share your views on Reysaş or what you would like to see next. Don't forget to subscribe for more detailed investment insights. I'll see you in the next one. Bye.